Hey guys, this is Chris Trades here with the Full Send Traders. I'm super excited for today. I'm going to have another trade breakdown. However, I'm going to be showing you guys why I'm so selective with gold. Why am I only trading maybe one, two setups per week on gold? I'm going to be showing you these A plus setups. But the reason why I'm doing this is because you guys know that I typically trade indices. That's my main market. I love the equity open, trading silver bullet. We have tons of volatility due to the embargo lifting at 9:30. We get tons of volatility. We have all those news events, and it just allows us to catch these beautiful moves that happen within 15, 20 minutes. Those same moves happen on gold. However, they're not as often. But the great thing about that is if indices are not looking great, I could still hop over and take a nice trade on gold. But hopping onto the MGC, which is micro gold futures, we're going to be looking at what did I see on the higher time frame and what was the overall setup and what has price action transpired into. Let's look at the 4 hour first of all. So the past couple weeks were, and maybe this was just like 2 weeks, right? We've been kind of sideways. Again, like gold is always going to run up to all-time highs, right? Like it's runs up forever. So it's not a bad idea to have that long-term bias in mind. However, on our way up, we didn't have the best price action. You guys could see we're just kind of like grinding up, and this was in a week, almost a weekly time span. This whole week, just a slow grind up, and that's not the setup we want to be seeing. We actually want to be seeing more of a fast move, large fair value gaps. Like I'll show you guys what that looks like. Coming down to the daily, I saw that we had a daily fair value gap. Alongside this, whenever we dip into this daily fair value gap, we also want to look past that and see, do we have any other price action that could kind of coincide with that fair value gap? We have this order block, which is almost like a breaker block because it has a manipulation leg. So I'm actually going to keep that out just to simplify it. But let's mark this one out, make it black. Going down to the lower time frames, I saw that we had tons of buy side. So we came down, we took sell side while also leaving tons of buy side. Now this is considered a low resistance liquidity run due to us having such a built up amount of highs. Liquidity pools, we're going to call that low resistance, meaning we're likely to run through those highs. We don't necessarily have to aim for those, right? There's this big misconception that when you enter a trade, you always have to hit your profit target. That's not always true because sometimes price uses it as a magnet, but it's not going to hit it right on the dot every single time. That's unrealistic to think. The truth is, if you can have a 2 to 3 RR in terms of your reward over risk, you're going to be absolutely amazing, especially if you have something as little as a 30-40% win rate. If you have up to 3R in all of your trades, you're going to be profitable, right? So you don't have to have a super high win rate and you don't have to hit and be super accurate every single time. That's the beauty of trading. Anyone can do it. Anyone can scale up and have 10, 20, 30 accounts, right? Okay, so us hitting this daily fair value gap, immediate reaction. Really nice reaction at the lows. What I liked here though, probably my favorite aspect of it, was this inversion. So on the 5 minute, we come down, and I'll admit I kind of messed up on my first execution in that my stop loss was just a little bit too tight. So I had it at this low as we reacted. Swept out, so I re-entered, and I'll show you guys what that looks like on the lower time frame. So I bought, it swept out once again. I bought again once I saw kind of that confirmation that we're going to continue to respect it. Some more things we have is the 2 minute fair value gap. You could consider this like a balanced price range. Given that we're also inside of the daily fair value gap, we have nowhere to really run but to run higher. So it's just amazing setup overall. What did I look for? I wanted us to push up above this high, but I saw that we were kind of stalling, so I just took profit. You see right here, we took out this high on the 5 minute. Head over to the 5 minute. We had the inversion as well. So again, I just wanted to see a steady trade higher, just for us to trend, but it looks like we were going to come back down. So I took profit. I tried one more time, seeing if we could get more continuation into these highs. Right here, entered again a second time. So already took profit, already took, and let's kind of extend this out, a 2.5 R. Now this was my second attempt at catching some more. Stop at the low, and I saw that we are kind of coming back right here, so then I ended up taking profit. And actually, this was tighter. This was around here, and this was based off basically that 5 minute once again right here, just tagging it and then continuing higher. And so the thing about gold is that we're going to run to our target, but it's never going to be a straight line. Yes, occasionally it's going to just like run straight to it, but it's not often. So in that case, a lot of the time we have to take a 1 to 2, 1 to 3, and we have to be satisfied with that. And that's why I kind of prefer indices, because indices gives you a straight shot all the time. It's a lot more consistent, and that's why you see the biggest payouts is on indices. It's on Nasdaq, because it's so volatile, but it's so accurate, and it just moves. It's very simple. But if you guys compare these two trades, these two moves, compare it to like some of the previous price action we've had, right? Like this is not the price action you want to see. Like you see right here, I try to execute. There's no straight steady line for this. And I mean, Asia might have better price action, but you guys know me, I trade New York AM session, and so that's the only session I'm going to trade. Looking over here, and it probably shows better on the lower time frames, we had a lot of fair value gaps. So whenever we have a lot of fair value gaps like this, that's actually a good sign. Even if they're like, they're bearish fair value gaps, wouldn't they be against our bias? No, absolutely not. We could use this as an opportunity to get long. Anytime we have bearish fair value gaps, but we know where our draw is at. We know that price is running up to these highs. We know that price is going to continue there. And because of that, we're not going to focus too hard on these 5 minute fair value gaps right here. We're actually going to use it as an inversion, which was used once right here, used once the second time. Like, look how accurate this is. Like, we continue to use those 5 minute fair value gaps. If you looked on the hourly, and I think even the 30 minute, we're inside of this huge fair value gap. But why am I going to let that deter me from taking a good trade? I know that because we ran into the daily fair value gap, I know because we have these clear targets, we're going to run to them. And I'm not going to let that defer me from taking this trade. And I'm going to stop yapping now. But over here, we have the indices, which I'm going to show you guys why I didn't take a trade on them. Going over to the 4 hour, and it's a little messy. If you look at the 4 hour, we're sideways. It's 2 weeks, and overall we're not going to have the best setups in this price action. If we want to see a good setup, it's going to be once we break out of this overall price action, we could have proper targets. But going down to the lower time frame, I'll show you guys what I mean. So we have these like beautiful lows lined up, right? Looks super clean, looks like we're going to hit them. And it turns out that we just completely turn around. And that's what you could expect from like these consolidated conditions. The only setup that I possibly saw to take was this inversion. And it would have been like this. But again, like there's no solid game plan here, because if we're aiming for these lows and then all of a sudden we have to switch our bias, all of a sudden we're aiming for these highs in here, Like it's just not a good habit to have, not a good habit to build, to be chasing price both ways. But overall, I was very proud of my gold trade. If you guys enjoyed this video, make sure you hit the like and subscribe button. I will be always doing more recaps, trying to show you guys the most knowledge I can from my setups. But I'll catch you guys in the next one. Peace.